Ladies and gentlemen, welcome back to the channel. Markets are moving higher today, up 0.22%. Some stocks, not as much. Some stocks are coming under a little bit of pressure today, but markets generally are moving higher, even though we got bad news today. Like, across the board, it was not a good news day. The headlines I'm going to share with you throughout this video are like, doesn't sound good. Mexico talking about implementing retaliatory tariffs on the US. There were some positive EU statements, but the economic data today was just really bad. Like, much worse than expected. So I will share all of this with you throughout this video. I also have a clip from Tom Lee where he says that, you know, we're in a new bull market. Can't really fight the bull. So ladies and gentlemen, we have a lot of work to do. Hit that like button and subscribe to the channel, and let's get started. Now, UK's Prime Minister Starmer says, quote, "I'm very confident we will get US tariffs down in a short time." Now, in big news today, the US ADP employment change came in at 37,000 job ads. The forecast was 113,500. The previous month was 62,000. So we were expecting this number to almost double from last month. It went down like 50% from last month. That is pretty damn bad economic data. Now, in the overall report, it says private businesses in the US added 37,000 workers to their payrolls in May 2025, the lowest since March of 2023, compared to a downwardly revised 60,000 in April and forecasts of 115,000. The services sector added 36,000 jobs, led by leisure and hospitality at 38,000, financial activities at 20,000, and information at 8,000, while job losses occurred in professional and business services, down 17,000, education and health down 13,000, and trade, transportation, and utilities down 4,000. Also, the goods producing sector lost 2,000 jobs, as falls in natural resources and mining, negative 5,000, and manufacturing, and negative 3,000, offset a rise of 6,000 jobs in construction. Meanwhile, annual pay growth for job stayers was little changed at positive 4.5%, and pay for job changers rose to 7%, unchanged from April's revised figure. Quote, "After a strong start to the year, hiring is losing momentum. Pay growth, however, was little changed in May, holding at robust levels for both job stayers and job changers," said the chief economist at the ADP. Also had ISM services PMIs for May that came in at 49.9. The estimate was 52, and last month was 51.6. So we were actually expecting this number to get better from last month, and it got worse. Quite a bit worse. Actually, anything below 50 is negative, so you actually went negative. Now, business activity came in at 50.0. The expectation was 54. So again, you were expecting all of these metrics to improve a little bit. Yeah, no, business activity plummeted. Services employment actually came in better than expected at 50.7. The expectation was 50. New orders came in at 46.4. The expectation was 52.3, so that was way worse than expected. And prices came in at 68.7. The expectation was 65.7, so that also came in higher than expected, which is bad. So pretty much across the board, bad economic data today. That's just the easiest way to put it. And almost immediately after this economic data came out, Trump went on Truth Social and said, quote, "Too late, Powell must now lower rates." He says that Powell must now lower interest rates. He is unbelievable. China today vows to speed up innovation and applications of AI. The EU economy minister today says that he is seeing negative economic impacts from tariffs already. China has introduced a national rare earth magnet tracking system, according to sources. This new system requires exporters to list clients and sales volumes. And, this is one of the rare earths, like magnets, that are not able to be, like, exported to the US or many other countries. Okay? This is one of the big contentious items within this conversation Trump and Xi are going to have. We hold semiconductors away from China, and China holds rare earth materials away from us, and they control 90% of the rare earth market. So, I wouldn't be surprised to see some of these restrictions lighten up, and to see Nvidia's restrictions lighten up as well, for them to be able to do more business in China. U.S. Trade Representative Greer says there is constructive engagements with the EU on trade. And he says that negotiations with the EU are advancing quickly. And he says the meeting in Paris with EU's trade chief, Sefcovic, was very constructive. And Greer says this meeting indicates a willingness by the EU to work with the US to find a concrete way forward to achieve reciprocal trade. The Bank of Canada today, kind of like the Fed or the Jerome Powell of the US, said the Canadian economy is expected to be considerably weaker in Q2 than in Q1, with strength in exports and inventories reversing. Which, as I've pointed out here on this channel many times before, the Canadian and U.S. economies tend to go hand in hand, okay? When there's a rise or fall in unemployment, when we have recessions, the U.S. and Canada tend to go through good and bad times together, mainly because we do a lot of business with Canada, and they are literally like 50 miles away from where I live. I mean, we're very close in proximity. According to a New York Fed survey this morning, most firms passed through to consumers at least some of the tariffs. 3/4 of factory firms, service firms, passed on some amounts of tariffs. And it says that switching to domestic sources may have blunted some of the tariff increase. And the CBO today says the House GOP tax bill will add $2.4 trillion to debt through 2034. And it says that late changes to the House bill ease the debt impact from the previous estimate of $3.8 trillion of an increase. Mexico will have measures next week if no steel deal is reached, according to Scheinbaum. Canada's Prime Minister Carney says trade discussions with the White House are ongoing. U.S. steel and aluminum tariffs are illegal. Mexico's President Scheinbaum says measures will only take place if there is no agreement, and it won't be an eye for an eye. Lutnick says the U.S. is improving CHIPS commitments to more than $300 billion. And Lutnick says that we will set aircraft tariffs by the end of the month. And U.S. House Speaker Johnson reiterates the July 4th tax bill deadline will be met. Also in the news today, Saudis want more supersized OPEC plus hikes in a push for market share. So that's actually, a downward pressure on oil, which is good for the economy, at least consumer perspective. Listen to this clip from Tom Lee and let me know your thoughts down below in the comment section. I actually think Tom Lee might be wrong here. I actually think the markets could go higher than 660 on the SPY by the end of this year. I think we could be at new all-time highs by next week. And by the end of this year, we could be at 700 on the SPY. I know. People always underestimate markets. The upside and the downside. And I personally think it could be even more aggressive. But nonetheless, take a listen.
Trading day of June, second day of June. Our first guest today says the current market looks more like the start of a new bull rather than a late cycle bull, and that could mean some good buying opportunities. Joining now is Tom Lee, Fundstrat Capital CIO and head of research and a CNBC contributor. He's very calm, even in the face of adversity, but this time the markets have come back to you in a big way. Because at this point, I think they've exceeded your targets they were a couple of months away from where we are right now, and we're already there. So you're raising your targets overall?
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right, we're at 5,900 on the S&P.
That's right. But our full year target was 6,600, so I think that's still a reasonable expectation.
You never changed that?
We haven't changed it.
Never did, even on April. The week of April 2nd or 7th or 2nd, you didn't change it.
No, it felt very shaky because that would have been, a couple 1,000-point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
And you think a bull market started April 7th or a new bull market started April 7th? In everything, because the NASDAQ already... if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull. But at this point, we think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change in positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before then?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. I mean, combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month. And I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up, even if goods prices go up.
You don't?
No, I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
So you're anticipating cuts, several cuts this year?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. I mean, there's a need to actually reduce interest rates.
Do you, Tom, at this point think that interest rates, because it doesn't matter whether we reduce or not, would the long end go up if they reduce the short end because of $37 trillion or this bill that's the big, beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates, and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
What's Bitcoin? What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But now I think, what are we, 104 this morning? So it's pulled back.
Yeah, I think it's consolidating. It makes sense. Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But, Bitwise has a great stat. 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your 150 target?
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So gold. I mean, Bitcoin could be 2 million, 3 million long term. I mean, even higher. Okay,
thank you. And we're talking years, obviously, but 95% mined. I don't think the last one is mined till 2150 or something.
Yeah.
It's getting harder and harder.
Yeah, I mean, depending on what decimal you want to use, it's probably like, 2040 or something. But yeah, but it's, if you're having something forever, it'll always.
So what's your terminal value?
That's what we just said.
Yeah, I mean,
the final.
He said 2.5 million.
2.5 million at the end.
Yeah.
Or maybe, maybe higher.
Or maybe even higher.
I didn't appreciate that point.
Yeah, I mean, it could.
But I guess maybe the way I meant that is, does that happen at the end after it's all?
When it's all mined.
When it's all mined?
But and there'll be network fees generated.
Or does that happen before it's mined?
It's like as if Berkshire did a buyback and there was only one share left, what would Berkshire's share price be? You know, it'd probably be the market value of Berkshire.
And as you said, if I go halfway to the wall, and then halfway to the wall, and then halfway to the
So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.